In today's video, we're going to be talking about the pre-halving period through the lens of these macro triangles that we tend to see across cycles and how that's going to inform a lot of the resistances and supports that we need to be paying attention to, combining also 4-year cycle resistances. Lots to talk about, so subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So in the past, a macro downtrend break always precedes upside going into the halving. Then we have a pre-halving retrace, and then a post-halving reaccumulation period, and then parabolic price action towards new all-time highs. Same thing here, break of the macro diagonal, and then we see a pullback going into the halving, pre-halving retrace, post-halving reaccumulation, and then rallying to parabolic new all-time highs. We're going to have the same thing occur in this cycle as well, but it's worth looking at some of the resistances that we need to be paying attention to, because if we look at 2015 and 2016, generally speaking, this is a resistance that was prompted by the macro diagonal rejection that sent price into a bear market bottom, and then prior to the halving we still couldn't break that analogous resistance. And it's the same story repeating across time. Even 2019 and 2020, generally speaking, this macro diagonal rejection forces price into a bear market bottom. We still revisit that in 2019, but reject to new lows. And then only after the halving, we retest this as a new support. And now the analogous situation here for this cycle is a resistance that we're actually pressing beyond currently. But the problem here, or at least the question is, are we going to be able to retest this resistance this month in the pre-halving period? Because notice how we never are able to do that in the pre-halving period across time. You can see that this is a rejection in 2016, there's a rejection from here in 2020, and it's only after the halving that we retest this level as a new support to rally to new all-time highs. Same thing here, rallying to new all-time highs later down in the cycle. So we can see that we're positioning for a retest relatively quicker than in previous cycles, and this retest is positioned a few months before, because this retest, for instance, that's 1, 2, 3, 4 times, or at least 4 months after the halving. Here this retest is 1, 2, 3, 4, 5 months after the halving. So the fact that we're positioning for a retest 2 months before the halving, so in total some 6 months ahead of schedule in some way, when we're taking into account this macro retest that tends to occur post halving, that's a 6-month gap in some way. Now the question is, do we get an upside wick before the end of the monthly candle close? Because if we do get a monthly candle close below this resistance area, then maybe we do reject going into the halving event, which would facilitate a pre-halving retrace that we've seen in the past. You can see right over here that this rejection gets us closer to this point of support, and historically speaking, you can see how this has always been a key reference point, this being a support region that once lapsed gets us to the bear market bottom. Then we revisit here. This is where we formed a reaccumulation period in 2016, and then we break beyond it, reject from this resistance, and then pull back for a retest. Though it's not a picture perfect retest, it gets us back above this red resistance to turn it into a new support. And the same story occurs in this cycle. This is the support that lapses, gets us to the bear market bottom, we break beyond it, and right over here we get a clean breakout compared to what we saw here. This was just reaccumulation for a long time before we broke beyond it. Here we just got a clean break, pulled back, and actually retested this in a very volatile way before breaking beyond this red region of resistance and turning into a new form of support before rallying to new all-time highs. So the question here is, this is a support that when it broke down, it brought us to the bear market lows, and then when we revisited this region just below it, we formed a reaccumulation period. And just notice how this is quite similar to what we saw in 2016. Of course, this reaccumulation period was just below this level, right over here, this reaccumulation period developed a little bit lower than this level, but still the principle remains the same, that this is a generational resistance that once broken enables us to revisit this red region. And that's exactly what we see right over here. Breaking this black level gets us to the red region. This has been the case here as well. Breaking the black level gets us to the red region and pulls us back, and then rallies beyond here as well. Breaking beyond the black level gets us to the red region, and if we reject from there, we get back to either black, but generally we retest it as a new support before rallying higher. So technically we're still in this range from black to red, and if we're able to turn red into new support, then we're going to rally higher. But if we're able to monthly close below there, then maybe that pre-halving retrace gets us closer to this level right over here, which is closer to the 30k region. We're not going to maybe get a picture perfect retest, because notice how here the candle body retest wasn't picture perfect, and here this downside wick wasn't picture perfect of the black level. But generally speaking, this is all very interesting. When we align the 4-year cycle resistances, notice how this red region of resistance is approximately confluent with the 4-year cycle resistances here. And in fact, in this cycle, this 4-year cycle resistance is completely confluent with the red region of resistance and the 4-year cycle resistance as well. The 4-year cycle resistance also in 2016 more confluent than in this cycle, for instance, but generally that confluence is there. And by showing you the 4-year cycle resistances in black right over here, these are the resistances that reject price throughout candle 1, 2, and 3 across time. Here as well, rejection 1, 2, 3 as well. And in this cycle, even though we didn't get to candle 3 to revisit this 4-year cycle resistance, 1, 2 were rejecting price. Candle 4 generally sees price break beyond this 4-year cycle resistance as we see across time. And even in this cycle, the only difference right now is that we're breaking it before the halving event, which is something we don't always see. Actually, we've never really seen that in the past. So really interesting to see this 4-year cycle get broken, this 4-year cycle resistance get broken in the pre-halving period. But let's see how things still play out, because in 2016, for instance, we got that upside wick beyond this red area of resistance, going into the 4-year cycle resistance and then rejecting into the pre-halving retrace. Similar situation in the pre-halving period, still rejecting from this red region of resistance. So how are things really going to play out? Because right now, if we're gonna see further pulling back, going into the halving and a monthly close below this region of resistance, then maybe we are going to enable a point of pulling back. But historically, going into the halving, we should still see reaccumulation at the very least, or limited upside going forward. At this point in the cycle, we tend to see upside, generally speaking. You can see that if we transfer this square, this rectangle, you can see that this is upside going into the halving for 2 months straight. Upside for 2 months straight before pulling back. So technically we should be going up, or at the very least reaccumulating over here. But if we monthly close below here, then maybe that kickstarts the pre-halving retrace a little bit ahead of schedule. But at the moment, it does look like this monthly close is going to occur beyond this region of resistance. And as a result, maybe some pulling back takes place, but generally the rally should continue, because historically the pre-halving rally tends to continue going into at least a month or a few weeks before the halving. So that means that we still have a few weeks left of this pre-halving rally. So that being said, thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.